This is a subject which a lot of people put off thinking about and don't want to address until it's too late, by which time they're already kicking themselves for not planning ahead earlier and being more prudent. And by the way, I'm definitely not saying that people should just go out and sell their crypto because they have a big gain. I don't like to sell crypto, and over time I'm generally a net buyer. But that doesn't mean that there isn't a good time to sell, or that it's ever a bad time to take a moment out to think rationally about whether profit taking may in certain situations and for certain holdings be a good idea. And of course, everybody is in a different situation and everybody has different priorities and focuses in terms of what they want to get out of crypto, and those thoughts will ultimately be what shapes the strategy and decision making for their situation. I have a number of friends who are long-time crypto investors and very successful, some of whom are long-time accumulators who have holdings of which they've never sold a unit, and then there are others who are cyclical traders and make their money from taking profit at high points and buying back at lows. One friend of mine made $650,000 of locked-in profit by selling near to the top during the 2017 bull run, and at least as much during this bull run as well. And if an investor can buy at the bottom of a bear market and then sell near the peak of a bull market, we're talking about gains of 30, 40 or even 50 to 1. And although it's obviously not easy to do and presents its own risks, you can see how taking profit at the right time can be an immensely profitable venture. But the risk is you may also mistime your sale, and then end up losing out on a lot of potential gain, which you could have earned if you just had held on. And the point that I'm trying to hammer home is that more often than not, the most suitable strategy for each investor will incorporate a mixture of these strategies, and for most people the best strategy won't be 100% trading or 100% buy and hold. Maybe it will be, and I don't know your individual circumstances and preferences, but the general rule is they kind of act as an insurance policy against the risks inherent in each other. If I only buy and hold, I may get 10 or 20 to 1 gains, but then I may lose most of them when the market crashes, meaning that by cashing in a portion of my holding as the market rises in increments, I'm taking out an insurance policy against a crash so that if the market does crash, which can happen at any time, at least I've already locked in a part of my gain which I can reinvest at lower prices if I want. And of course then having a part of the portfolio which is exclusively buy and hold is an insurance policy about being wrong in timing the market. And if there's one thing which all investors across every market and asset class have in common, it's being wrong about certain things. No investor who is in the market for a fairly long period of time can be right every time. And sometimes we will be wrong on a very large scale, and that buy and hold section can act as an insurance policy which will grow with the crypto market over the long term and ride out the highs and lows. One of the things which I think that many investors get wrong in crypto is that they come into the market and they expect not to have to put in any work or time into rebalancing and into researching the actual fundamentals of the project and how they are changing over time. I think that it's a huge mistake to think that in this rapidly growing market and rapidly changing space, things will always be similar or the same in 6 months or a year after making the investment. You see, a lot of people come from the stock market or come from real estate, where if you're buying the stock of a company like Coca-Cola or Gillette, or even a rental apartment, that asset is going to be very similar in 10 years' time. I mean, the income streams and product portfolio and sales are likely to be very similar, and people are in these types of investments for the predictable economic characteristics. And after 10 or 20 years in these markets, these people come into crypto and they think that they can buy and sit back, which is one of the reasons that many investors lose money. Crypto wasn't even around 15 years ago, and just look at the market today. And every year there are major changes in the market conditions, and of course major changes in the plays as well, which means that investors should be paying much greater attention to when it's maybe time to take profit in crypto, and then rebalance than in the stock market or in real estate. And again, I'm not saying that it's always a good time to sell when an investor has major gains, as of course it depends upon the situation, and at the end of the day, it's the investor's decision to make. But I hope that the reasoning laid out in this video will help investors who are new, or who maybe just haven't given so much thought to the subject, to understand the importance of keeping a very close eye on each holding, and the changes which are happening in the economics and growth of each project and their competition. If you enjoyed this video, be sure to subscribe to the channel as we have a lot more content like this out every day. Thanks for watching.